Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 21st. Great to be with you guys this morning. Good morning to you as well. Jay, Steve, everyone in the room. We are at the conclusion, or coming into the conclusion of an interesting week. We finally got the dollar pullback we were looking at. Seeing a little bit of an easement on that today, but lots to cover. So as we head into the end of the week, we're pretty limited on event risk. You got Japanese inflation on tap tonight. Tomorrow you do get market manufacturing PMI here in the US. That's actually going to be an interesting read because we are expected to see a print of 60.3, which is a slight ease from the previous read that we got. So another look there on profit margins. But on the menu for today, DXY, dollar yen, SPX, dollar CAD, Aussie dollar, a quick note on dollar Swiss, euro, sterling, Kiwi, the US 10-year, gold, and Bitcoin. It's a full loaded calendar, so let's jump right in. Any other questions or trade setups, as always, feel free to throw them on the message board. So let's get started. Here is what the DXY looks like now. Here's the update from the 18th, guys. We were talking about that slip, possible slip back below that uptrend, that 25% parallel. There was a fib ratio here. I've kind of removed it since then. We've broken below. The basic premise is still the resistance off of 94.65, 94.47. How deep this gets, it's now in the second week, is the primary concern here. One thing I do want to note, momentum kind of popped through 60. There was the first 60 close above that we've seen since, well, this year, okay? And it suggests, again, that the downside momentum is beginning to wane. So on this pullback, the trade is still constructive above 92.48. I don't think we quite get that low. Here's what the daily chart looks like for DXY. So near term, you have the August high day close, you have the November high day close from last year, and that 25% parallel I was talking about right there holding support. So that's where I was looking for this decline to sort of level out. We didn't quite get that low, okay? The low registered so far at 93.49. We have 93.45. So bottom line, this thing has made an objective break of the monthly opening range. That suggests you look for a late month low, near-term support 93.45, 93.40. Bullish inval is all the way down here. Again, I don't think you get quite that low. But even if we were to buckle below 93.50, you know, you're still within the broader uptrend. Here's the intraday chart. And this is the chart I've been showing you guys. We haven't changed anything about it. Here's what it looked like back on the 18th. So the weekly opening range was taking shape. We broke above, or below rather, uptrend support. That's the median line. Nice cascade effect. Found support right at the median line for the descent. Again, failure at the median line. And here, 100% extension, 2 equal legs gives us 93.36, just below the bottom end of that zone. It wasn't added here because we didn't have that high-low high in place yet. But now that we do, it opens up that level from 93.45 into 93.36. And that's sort of where I'd like to see a larger reaction. If we get a dollar pullback today, this is where I'm looking for a much stronger inflection. If it's going to hold and we've completed the correction, this should be a low. If this breaks, man, there's a lot of way down. There's nothing here until you could dip all the way down to the lower parallels. That's like 92.80s. So I'm really looking for an inflection here. If we get a little bit lower in the dollar, 93.36, 93.45, I want to see some reaction here. We need a close below to continue favoring the short side in dollar near term. Okay. That said, the immediate short bias is at risk while above 93.36. So if this bottoms out here today and holds, you know, the recovery, you got resistance at 93.72. That's today. Weekly open resistance at 93.94. That's also going to be my near-term bearish invalidation level. If we make it back above the weekly open, that's going to necessitate a break of downtrend resistance and a pivot back above uptrend resistance. So that's sort of your key region of resistance, key level of support for the DXY heading into the close of the week. Market manufacturing PMI data on tap tomorrow. Any questions on DXY? I was going to just go into dollar yen, but I do want to take one moment. I'm just going to go out of order here and show you the 10-year yield. This is something important today. I've been showing you this chart for quite some time. The update on the 10-year was back here, I believe. Yes. Okay. Here's what we looked at back on the 19th. Major resistance at 162, 163, a 1618 extension off the low, 786 retracement off the high. A couple of days ago, we ran into it, pulled back. Here's the break. And yesterday we closed above. What does that mean? For all intents and purposes, that's a near-term breakout in yields. Okay. Now, again, it's in this dynamic where the immediate advance looks vulnerable. You're getting divergence into this high in the daily chart. You haven't clipped the high day close, which was 170. I want to see that. But that all suggests, again, constructive above 154. You've got to beat 170, which is the high day close for the year, to mark resumption. With that in mind, keep an eye on what we're doing with the DXY here, right? Dollar yen is another sideways sort of action you're going to look at within the confines of today's price action. Here's what dollar yen looked like into the start of the week. The resistance zone that we were eyeing is still holds. Okay, it's 2018 high, 1445, 1455 right here. You have the uptrend resistance. Let me show you what this looks like first on the weekly chart. We've been watching this one for a while. Major resistance up here. We talked about the 2018 high. Excuse me, the 786 retracement from the late 2016 high, the median line for the current operative formation we've been in all year long. Major resistance, and major resistance. Remember on Tuesday, we were looking at this. We hadn't quite ripped into it. We hadn't quite pushed into it yet. So I'm glad that we did. It sort of alleviates that risk. And I think that, near term, yeah, the long side's a little bit mild here. You want to tone down that expectation. You want to tamp down appetite for the long side here. So again, there's a 2018 high, there's a 786 retracement. Here's the move into it. If we buckle back below 70 in momentum, we buckle back below 113.78 in price, it would suggest, again, near-term exhaustion. Don't want to get too cute on this because this is a major breakout in price, guys. We are now at multi-year highs. So you don't want to get too cute with this, but the immediate long side does look a little vulnerable below 114.92, 114.55. Break below 1370 is what would give you that sort of near-term corrective move lower. Here's what it looks like on the intraday chart. The only thing I wanted to highlight today, I was laughing at this earlier this morning. So here's what it looked like into the start of the week, right? Nothing's changed. We went for a tap of it, finally pulled back. And what does that suggest? The weekly opening range low is intact heading into Thursday. Very, very basic setup. So a downside break here. If it happened earlier in the month, I'd be telling you to look the lower parallel. But now that we've traveled in the time decay, if we break below this, you're likely going to see, in my humble opinion, again, a larger setback here in dollar yen. Remember, it's been a phenomenal rally. And if we take a basic trendline support off the lows, which is what this slope is basically entailing, you still have room to like 113.40, which I think is just going to be an initial target. I do think you wash out if this breaks. But at the end of the day, nothing can be assumed here until we break this objective weekly opening range. And because it's happening right below resistance, if we get the breach, it's likely going to be a runner. 115.50 is just going to be your initial target. That's 618 retracement. Comes in on slope later into the start of November, basically. But as it stands right now, this is a pivotal moment for dollar yen. Okay, and we're continuing to watch rates move higher. This tends to track rates, right? So if we pop through, again, it's likely going to be a pretty quick runner. I don't have any exposure on this. Pistol to my head, because this is dollar yen, I would expect it to wash out first. That's what you're going to have to determine if the washout is legit or not. So I'll leave it there, guys. Dollar yen, I'm flat here. I'm looking for a break of the weekly opening range. We're at uptrend resistance. We're at lateral resistance. This should be a well-defined break once we get it. It's Thursday. Questions on dollar yen? That is number 2. Number 3 from that same update, or I guess this is number 4 because we did hit yields. Here's the SPX. And here's what SPX looked like. Again, this is back on the 18th. So the level that we were focused on as resistance was right here. It was 100% extension off the low, a 786 off the high, gave you 44.86 into 44.91. If this pops, you're looking for the high day close. It's exactly what happened. Here's what it looks like on the intraday. Okay, and here's what it looked like again last week or earlier this week. So here's the pop. What do you want to see? When we see a break of confluent uptrend resistance, you want to see that accelerated move. Here it is, straight shot up. Here's the high day close. The record high hasn't been touched yet. I saw the Dow make a record high yesterday. S&P has not. Keep an eye on that 45.51 level. A breakout, guys, from there, and there's really nothing on the charts as far as targets until you get up into 46 and change. It's the 100% extension from the ascent off the lows you made back in 2020. So it's a 2020 rally. And again, I do want to just highlight this daily chart. You know, what do I want to say? Here's the high day close, or here's the record high. Here's that slope, and this is just what I wanted to focus on. Uptrend support, uptrend support, uptrend support, break, resistance. It's still there. So you need to get through this to launch into 46.14 and beyond. So watch this here today. You know, if we are, if this has completed sort of the correction to the downside, this looks like a 1, 2, extended 3, longest part of the Elliott wave advance, which suggests you look for a 4 and a final 5 if this does hold. So I do think you risk some exhaustion here. It's constructive above 44.44, and the topside breach targets 46.15, 46.16. So expect some back and forth here. Expect some back and forth here, but use some caution. Again, intraday chart looks pretty clean on that front. Heading into resistance here today. Watch that breach above 51. That's the SPX. Questions? All right. Next up is dollar CAD. Here is Looney. So for the dollar CAD trade, I know that we got stopped out of that swing trade if you were taking the setup there with Jamie with that last overnight just pushing through 23. I still think the trade has merit. The idea of the rebound in dollar CAD has merit. Here is the weekly charts first. So when you take a look at this from the weekly standpoint, we've been talking about this critical region at 23.66 into 23.14. What is that? It's the 618 of the yearly range. It's the objective 2018 close low, and we've been watching that parallel there, holding support. We're still there. We closed in that zone last week. This week has been a wash. We probed above, we probed below, but we're still there. So where does that leave us on dollar CAD? At the end of the day, if we close sub 23.15, I do think you risk a major washout. But until we do, we're at pretty important support. Here is dollar CAD looks like on the daily chart. Even if we don't take into account those lateral levels, basic slope off the high, 1 touch, 2 touch, if you want to call that a break, we're still there, right? On divergence and momentum, it's not really a divergent signal, but not necessarily keeping us on the short side either. So bottom line, here's what the intraday chart looks like. I haven't changed anything. These are the same exact levels that we were looking at on the update back here. And here's what the daily chart looked like back, this was last night. Told you to look for a break of this immediate zone, okay? We went for a probe and overnight trade. That's what stopped us out of the swing trade right there. But we're still essentially in that zone. The July low at 23.02, you got the 618 March low at 23.65. I'm looking for a break of this zone today. Now, objectively, we'd typically be looking for a break of the weekly opening range to shift the focus higher. But because of the downtrend here, the strength of the downtrend, how we're hugging lateral support, if it breaks through, this is going to be your weekly open, the 618, and the March low. So anything northbound of 23.65, in my humble opinion, would give us a near-term breakout. 24.40, bearish invalidation 24.93. I don't think you necessarily get that high, but if you do break, these are sort of the first levels to look for. Jay, give me some knowledge, my man. He says 1618 extension from the September high, still alive? So I've been working with the 1618 off the August highs, Jay, right? 1, 2, 3. That's what's giving you this 100, which held for 4 or 5 days before we broke. That's the 1618. If you're talking about just from the September high, let's take a look. Gives you the 1618 at 122.48. My man, you've been killing it with the extensions lately, Jay. Love it. Yeah, right there. I mean, it's the July low, 2302, same level, but right on. That's further adds further fuel to the fire, Jay, that we are at a pretty major inflection zone here for dollar CAD. Again, don't take my word for anything, guys. Always look back in time in charts and see if what we're looking at jives with what the technicals are saying. 1618 lover, Jay, I'm starting to love it too, man. In these big market rips or these declines, they can be absolutely beautiful critical levels. So pivot levels rather. So yeah, I'm liking it. I do think, again, dollar CAD has been some pretty downside pressure. Given that the 1618 here is now even more, if this breaks, again, there's like nothing till 121.50 in my humble opinion. The 2018 low might be a soft target at 2240s rather, but that's like your major next measured move. So let's see if we can't get a pop here. I'm not holding on anything here yet, just as a disclaimer, but if we do pop 2360, let's see if we can't get a little bit of a relief rally here in dollar CAD. No CAD data worth of note into the close of the week, but big support here. So where does that put us? We've been talking about the essentially the risk on environment and how that's been really fueling not only the equity markets, which again are ripping into fresh highs, but you're also fueling a sell-off in bonds, right? Which is risk on, which is pushing yields higher, right? And you're seeing at the same time, and we'll go over this in a moment, Bitcoin, guys. There's been, I did a interview this morning on Cheddar. If you guys watch Cheddar News, we did a interview about Bitcoin and where they were asking me where do you see this thing going. So we'll look over the levels there as well. But bottom line, the risk on environment has been going on despite this inflationary concern. And with that inflationary concern, you're seeing Bitcoin catch the bid, not gold. Gold is holding its own, but it's certainly not seeing the upside surprise that we're seeing in Bitcoin. So is Bitcoin taking on that inflationary hedge as we get, CPI at 30-year highs? I think we can make that argument. Holding costs are less. It's not like gold. And as the market gains legitimacy, again, I'm going to a Bitcoin section here, so I'll stop, but you're seeing that play out. So look, at the end of the day, looking for a break of this key range in dollar CAD as we push the lows. Next up on tap is Aussie, again, going along with the commodity block, which has been performing rather well alongside stocks. Here's Aussie. I like Kiwi better, and I'll tell you why in a moment. Kiwi's at a big resistance zone. This one just turned ahead of it. Although it does signal exhaustion, it turned right ahead of that 50% extension retracement we were looking at, 75.56. Again, uptrend resistance is up there too. We turned right ahead of it. So let me take you back real quick. Here's Aussie first on the weekly charts, right? We've been talking about this. I wanted to see an extension into 75.42, and we got it. Here is the 52-week moving average. Here's the 100% extension off the low, so 2 equal legs. Here's the objective March low. Really nice level, 74.52. I like this exhausting here, okay? But the intraday has a little bit more of play in it. Here's what it looks like on the daily charts. Basic slope, guys. This parallel is a simple copy of that. Nothing more, nothing less. And look at the reaction you got here today. So maybe we don't get the extension 75.50. Maybe the 100 off the low, this caught the high. Let me add this to the daily chart here. right? Maybe that caught the high. Well, that could be the case. You've had a pretty stellar run. If momentum dips back below 70 on a closed basis today, it would certainly be encouraging for the topside exhaustion sort of interpretation of the trade. Let me just clean this up for you. All right, and here's what it looks like on the intraday. So again, I'll put that 100 on there, but here's the snapback, and we're back above this major pivot, which is why I tell you I like Kiwi better for the possible exhaustion, because if this is a break of resistance and then we failed here, this could be a test of support for more resistance before the move off. So not quite as excited as this one as I am on Kiwi, but looking for possible exhaustion. It's the same setup essentially on the Aussie rally here. Here's what it looked like into the start of the week. So again, I wanted to see that 75.50 clip, didn't quite get it. Here's the turn lower. Is that the high? Could be for the near term. You'd need the break below 74.50 to give you the resumptive move, or at least the reversal signal for a move lower here in Aussie, but we are at pretty big resistance on Aussie dollar. Questions? That's number 6. Number 7 from that update was dollar Swiss. It's an interesting trade because it was just kind of ranging right below slope resistance. So here's dollar Swiss. Initial targets just got taken out 91.75. Your secondary limit here is 91.50. So it's been a pretty clean trade. This is your first sort of level of support you'd want to pay attention to. Here's what Swissy looked like earlier in the week. So, or again, this was last night. Our previous update, let me take you to that, was back on the 12th. And just to show you how this thing has panned out, here's what it looked like on the daily chart. We were worried about this reversal here. We talked about trend support at that 38.2. We were looking for the break. Stayed there for like a whole 3 weeks, 2 weeks. Here's the break. Here's the first major support zone. This is the 100 off the high, so 2 equal legs, 91.70. This is the 100-day moving average, 91.73. And we're there right now. Here's, again, the scalp as it looked like last night. And here's what it looks like now. So we've made an objective break of the weekly opening range. Here. Has you looking for a late week low. Again, first limit, 91.75. Second limit here is the September open, 618 of the rally, gives you 91.50. Look for a larger reaction down there if we get it. At this point, weekly open support is going to be your near-term bullish inval, and that's at 92.30. Questions on Swissy? It was actually one of the ones that are actually pretty clean this week. So I went backwards. I should cover Euro, then Swissy. But here's Euro, similar scenario. The resistance range has offered some kickbacks, but you're not getting any play on the downside. Whereas Swissy has already made that run, right? This is dollar weakness. Dollar weakness hasn't fueled, the Euro breakout. That's still at resistance. I usually love Euro. You guys know I cover this every single webinar, but this week I haven't been able to get a fix on this. I was actually thinking of taking a short yesterday off this rally against the high. It would have panned out pretty well, but again, it's counter trend to the trade that we're in for the week. I want to see a stronger signal. I mean, you're getting it already, initial divergence on that rally into the high, but it still continues to keep us up this upslope. Look, at the end of the day, it's either a break below 1620 or failure off of 17 is actually 1695 is what would at least tell me the near term resumptive trade lower. From here, there's not much. Now, you could fail again against that high, and if we open up the US trade session, Europe closes and we start to fail, a stop against the high would be the position, but you still got to clear below that 1630, 1620 level. Major pivot, median line, downtrend resistance, it's all here. That's the level you need to clear to even get a test of the weekly open, which is 1591. So another one where the rally is extending into the 100, 2 equal legs, nice level for resistance. Let's see if that holds to the close of the week here. Questions on euro? So no change to any of the levels that we presented back here. Okay, we held resistance, we came back, tested support, held resistance, and this is the critical range for euro over the next 2 days. All right, all right, all right. That was number 8. Number 9, here's sterling. Okay, so this one's very interesting because it's essentially the same trade as euro, but it is grinding into this critical resistance. Again, let me take you back on sterling. Here's what the weekly chart looks like. Not really much here to get excited about. We came off of the lower parallels. I still think, you know, on the weekly, you could possibly still probe a little bit higher into the 38 handle. But when you start to look at this on the daily chart and the intraday, shows you a little bit different of a picture. So here's the 786 retracement of last month's range. Here's the 100 off the low. Now, when the market does something like this, I would typically just drop that 618 and focus on that 100. It's been the exact stretch high for the last 3 days, essentially. My only issue is you also have the 100-day moving average right in there, and that converges on the 786 retracement. So this whole area is problematic for me near term. Okay. At the end of the day, a breach above the September high close at 38.67. This is the breakout. Interestingly enough, if we jump into the daily chart, or the weekly rather, it's exactly where this zone is, 38.60s right there. So you can envision a scenario, again, where it's just going to screw everyone, go for attack, then turn around. Sterling's a notoriously professionally traded market, but I will be taking a look at it. Plus the 50. Yeah, Jay, I removed that just for the sake of clarity. There's a lot of lines there. So yeah, if you add the 50, it's right there as well. I tend to put a lot more credence on the 100. Remember, 50 is not a true fib, Jay. It's just half the move. And it's not that that doesn't have merit. Certainly a lot of trends do retrace half the move before resumption, but it's not a true fib, right? 2 equal legs off the low for me is more significant, because if that holds, it would suggest, again, your basic Elliott wave pattern that the broader trend is still lower. So I am very interested to see how this plays out into the close of the week. If we do get that spike, don't get faked out. 38.67 is still on slope. It's still last month's high close, and the parallel converges right there. So into the end of the week, sort of I'm looking for the exhaustion pump. If we close 38.65, forget it if we close above that. But right now, that's sort of the risk I'm looking at with this sterling rally. Again, here's what it looks like on the intraday chart. You know, you didn't get that real whiplash off the high. So I do think you might still make another run. At the end of the day, we're on the lookout for possible topside exhaustion on the sterling rally. Questions? Weekly opening range low comes in at the 37 handle. Essentially, you need a break below this zone right here, the objective yearly open. There's bullish invalidation here for sterling. Just above, can see the 200 DMA. Let me see what that looks like. Yep. So here's the thing with the 200 DMA. Again, you guys know I'm not really big on moving averages. I tend to look at moving averages within the context of price action. So if we look at the 100, it's not that I'm just married to the 100, Jay, but if you look at the 100, resistance, okay, little throw through, but resistance, major pivot, the break plummeted, the rally failed, support, right? Support. So we don't want to work with the moving average as sort of just an inherent, all moving averages are inherent support or resistance. Some tend to perform more, you know, the efficacy is better than others. And every asset, you know, will drive to its own, you know, kind of rhythm. That's all to say, Jay, that for me, you know, I want to see that that moving average has actually made major inflections. The one thing about the 200-day moving average is a lot of people use that as a basic gauge of trend. Distance from the 200-day moving average can oftentimes give you that momentum read, right? So the pivot above and pivot below, sure. This year, I don't want to put too much credence on it. I'd rather be more focused on that 38.65 zone, Jay, last month's high. Make sense? Good eye though. I love how you're pulling these stuff out, these rabbits out of your hat. Keep them coming, Jay. Everyone's benefit. All right, so that is British pound. Last FX update is Kiwi, and I don't know why I put this last because this is one of my favorite ones, but I do like this zone. So if you guys recall, I pointed this out on Monday, and I put a star next to it because this is my favorite Fibonacci confluence. I've showed you this over and over again. 100 off the low, 618 off the high, yearly open 71.89. Look where this thing just petered out. I mean, you can't make this stuff up. So yeah, I like this short. The first level limit out is 71.70. If you start to get the play and the reversal lower, okay, again, a little bit off the table already here at 71.70, but a basic retracement for the rally now. Look where the 38.2, whoop, comes in. Sorry. Okay, look where the 38.2 comes, right above the weekly open. So you're essentially, just to get a 38.2 of the rally, it's going to necessitate a drop to the weekly open. So 71, okay, is going to be obviously your initial weekly opening range high. There's some pivots there. Watch that. But if we do buckle lower, 70.80, guys, it's almost 100 pips. That's all predicated on this key resistance region holding. Okay, so tight stop against the high there was the way to play it. But from here, you still have to have a stop against that high if you try to get into this trade. So do keep that in mind. But man, this is big resistance. This is big resistance. And I love it on all the time frames. If we look at Kiwi, even on the weekly charts, here's the 2021 open, objective level, not Mike Boutros' opinion, not Jamie's opinion, fact. 618 retracement of the yearly range. Again, not Mike Boutros' opinion, not Daily FX's opinion, not FXCM, not everyone. Fact. And we have the 100 off the low. So I am looking for a more prominent inflection here. Look, if the short trade doesn't pan out and we rally into the US Open and breaks through, the breakthrough is likely to be a ripper. A ripper. 72.87 is the first level on the upside if this breaks. But all things held constant, man, we're at big resistance. We're at big, big resistance. Questions on Kiwi? All right, so that is the FX front. We do have to cover two gorillas in the room, one being gold and one being Bitcoin. Already messy, but was the high week close. For which one is that, Jay? For which asset? Yes. Yeah. Yep. Again, because the chart was messy. Jay, your mind is aligning with mine, my man. I'm loving it. Yeah. So I didn't put that on just to keep the chart tidy, but you do have absolutely the high week reversal close right in that zone. Add some sugar on that, baby. I love it. Right on. Right on. So here is I'll hit gold first, and then we'll hit Bitcoin. One of the things I was talking about in the interview this morning on Cheddar was this idea, this notion that gold or Bitcoin is taking, excuse me, the inflationary hedge more so than gold. I don't think that's up for debate, guys. Sound check, please. Guys, is there any issue with the sound? Could I just get a heads up if the sound is all right? Mic check, mic check. Guys, are we good? Smaller than before. Okay, hold on 1 second. Okay, guys, is there any improvement on the sound there? Looks like I'm gonna have to get a new mic soon. Yeah, just give me a heads up, guys, if the sound has improved. Better, good, okay, cool. Thanks for that. I apologize about the hiccup there. But you see that again, you don't need to take this like storyline in play. We could just look at a side-by-side comparison of the Bitcoin chart and what we're seeing in gold. And in the face of inflation at 30-year highs, yeah, I do tend to think that gold hasn't taken that inflationary hedge role as much as you've seen it in Bitcoin, right? So I do have a lot to say about Bitcoin. I'll go into this in a moment. But for gold, the only thing that matters here is this critical resistance range, guys. We've been talking about it for 5 weeks. It's 1791. It's a 618 decline off the monthly highs we made back in August. And we've been unable to clear this zone literally for all of these weeks. So from the weekly standpoint, you still need that tell. Yeah. From the daily, looks a little cleaner. So here's your monthly open. You looked like a breach of the monthly opening range. It was a little bit earlier. 13th of the month is where you saw that rally. But at the end of the day, here's the 618 of the decline from the last month's high. Here's the high day close. This is still critical resistance, 1791, 1796. It's the same level you're looking at here. Okay, so weekly resistance, daily resistance, slope resistance, a basic trend line off the highs from June. Touched once, touched twice. That's resistance. Okay. Intraday, the trade looks like this. So since the start of the week, there hasn't been much play at all. Here's what the start of the week, or here's what it looked like. Again, this was into just a couple of days ago, the rally, right? The 17th, pushed through. It actually even topped. I'm sorry, I don't know why I'm looking at British pound. Where's the gold setup? Oh, here it is. It pushed through that 2012 high, the 618 retracement, pulled back, and into the start of the week, we were saying, look for a low off of one of these two levels, ideally the 618. Didn't materialize. In actuality, that 50 was the low. Here's what it looks like. Dipped into that 50, break higher. You're holding this slope, but you're not breaking resistance. That's still your key support. What do? Right? And this is in the face of a 30-year inflation high. So yeah, I don't think that necessarily the bid for gold is the inflationary hedge. Am I still bullish gold? Yes, guys, on the longer term. Is gold, do I think, gonna continue to move higher? And generally, yeah. But is the inflationary hedge gonna be the justification of the move here? I don't think so, at least not in the near term. And we're seeing that reflected in price. It's not my opinion. It's basically what we're seeing in price. That's all to say. Gold, the only thing we need to do is look for a break again of 1761, 1795. I'm still looking for that as sort of the catalyst. If it breaks lower, you risk a larger correction within the broader uptrend. But once we clear 1795, 1809, 1825 is still critical resistance for gold. Absolutely critical. So not a super high conviction trade thus far. The week has been kind of a chop fest. Would have wanted to see a more well-defined weekly opening range crack. So we don't have that kind of setup on play. I'm shelving gold for now, but I do want to see if that resistance level holds. Bitcoin, this is where everyone's looking, and there's a lot to look at. So let me take this in stride. First of all, remember we were working with the 2018 parallel, right, for the decline that we saw in price. It looked like this, right? We were looking for a parallel in that price action for the decline that we saw off this year's high. This is what it looked like. And I just wanted to highlight this to show you, when did it decouple? When was that decoupling essentially more readily identifiable? And it was right here, guys. Even throughout last month on that entire decline, what did we say? The 2018 parallel in price actually jives pretty well with that. In that parallel, we continued to a new low. Now remember, in 2018, we made a correction of over 80% in Bitcoin. In 2020, we made a correction of over 60% in Bitcoin. This correction ended up being a 50% correction. So what does that mean? the larger corrections in Bitcoin have continued to dwindle. They're smaller and smaller year by year. What was the catalyst? There's two events, and I'm not a fundamental guy, guys, but these two events certainly were instrumental in this break and decoupling in the trade. First one happened right here, September 30th. Fed Chair Powell comes out and says, we're not looking to ban Bitcoin or cryptos, generally speaking. In fact, he called for increased regulatory on the altcoins, which is the coins that are, one for one, like Tether, one for one. I put that aside, right? The following 2 days later, on October 5th, you've got the head of the SEC, Gensler, coming out and saying, we're not going to ban crypto. And certainly these catalysts were instrumental, right? Because the biggest concern people have been having with crypto is the regulatory environment, specifically bans, right? So once we got those bans sort of abated those concerns, the regulatory environment, those are starting to abate, and sort of that was the decoupling of the 2018 breakdown. And so we can drop that from here. So the question becomes, well, is there anything else in Bitcoin that can give us an indication on where we're heading in price? And I would say all we got to do is look back to last October, right? Here's last October price action. Here's the August, right? Consolidation. Here's the breakout that we got in the October break. And that's what's happening here. It was early October, but here's the break. So if we just take the breakout sort of play and mirror that, that price action would suggest we're in for a prolonged period of advances here for Bitcoin. It would suggest that the corrections are likely to be shallow, and it would suggest that you look higher into the yearly close. Okay, so my first thing I would say to you right here, we're at resistance. No one's talking about it because everyone's talking about the record high, 64,970, right? But just higher is the 618 extension from the ascent off the lows back here in 2020. Let me get that in view for you. So right here, 1, 2020 low, 2, 2021 high, low, 618 extension comes in right here. So it opens up that resistance zone that everyone's looking at. They're looking at 64,895, but they need to be looking at 66,325 as well. Okay, so if this is if this is going to be sort of a fake out, guys, here, and a pullback, don't get faked out. It's still within the confines of the parallel of the 2020 ascent. Do you think you're constructive? Well, above 58,800, let's call it. A breach from here, again, 77.6 and 89.6 are just initial targets. I mean, the top one goes until 127. It's 127,000, but you get the picture. All right, pullbacks on the back of this breakout are likely to be, again, I say rather to be timid or narrow, not quite as big, but that still can, that still can offer up a decline of like 12% or more. But you get the picture. This is a major inflection zone in price. If we do pivot higher, guys, it's constructive above 53,000 essentially. This is your near-term support, but this is bullish inval. Next upside targets are pretty well defined. So do not fall in with the, the headlines are getting very, very one-sided as we're heading into this major resistance level. I'm not saying get bearish, but if you're looking for entries, you might get some kickback here to get that entry. If it breaks, it's likely to be a runner. This is a major inflection zone in price. You take the January high from 2020 low, the 100% extension is also near there. You take the January high from the 2020 low. And January high, so you're talking about this advance, this 100, puts the 100 there. Yeah, I can see that, Jay. Not needed in my opinion. I love your take on the extensions, but you don't want to overdo it. This is pretty significant. An extension off of last year's low and the record high. You know, I don't think we even need anything more than that. So if we do buckle here, like I said, expect an accelerated rally. Any pullback should hold 59,000 if we are heading higher here on Bitcoin. But my point being on this, guys, is this has way taken on more so of the inflationary hedge than gold. So as the inflation story deepens, as it get worse, it kind of jives with the continued progressive move higher in Bitcoin. I just want to see a concerted break here, a concerted break above 66, sort of alleviate that risk of a washout here. All right, that's everything that's on my list, guys. Do let me know if you have any other questions or trade setups you want to review. The markets are stretched. I'd use some caution. What I'll be focused on most aggressively is going to be this Kiwi turnaround. I love this turn from resistance. We need to see a break below 71.70. This is just a bigger pullback. For Euro, again, you know, do we go for the climb into 17 before the pullback or not? That's kind of what I'm trying to gauge. But again, looking for topside resistance. For the dollar, looking for support. You know, get that drive lower, please. Give me 93.40, 93.30. I'd love to see a stronger reaction there, an area of which I'd be much more interested in possibly looking for the exhaustion low in the dollar. Remember, we've been talking about dollar weakness for the last 2 weeks. We've been looking for it. It's all within the confines of the broader uptrend. So I am looking for the dollar weakness to essentially start to abate as we get closer to uptrend support. All right, guys, I'll leave you there. If there are no other questions, we'll wrap it up. Best of luck trading into the close of the week. Watch those market manufacturing PMI numbers. Again, we're expecting a weaker read at 60.3 from 60.7 previously. This is a flash read for October. It's going to be the last event risk into the close of the week. For the yen crosses, one other thing, we do get inflationary data out of Japan later tonight. I don't think it's going to be a major market mover, guys, but with dollar yen trading right here at the highs and pulling back, might be the catalyst we need to finally get a chop of the weekly opening range. So keep an eye on that later tonight. Jay, Aurelie, and Steve, everyone in the room, have a great weekend. Same to you. And I will see you guys on Monday morning for the free session on Daily FX and right back here on Tuesday and Thursday on SB Trade Desk. Have a great weekend, guys. Cheers.